Let's break down the QQQ ETF. It's a term you might have heard, especially if you're interested in tech or growth stocks. But what exactly it? Well, it's simpler than it sounds. Think of it as a pre-packaged collection of some of the most influential companies out there. Imagine owning a slice of Apple, Microsoft, Amazon, and 97 other top NASDAQ companies all at once. That's the power of QQQ. It gives you exposure to a broad range of leading businesses. QQQ is an exchange-traded fund, or ETF, that bundles 100 of the largest non-financial companies. These are powerhouses in their respective industries. On the NASDAQ into one investment. It's like buying a basket filled with the best of what the NASDAQ has to offer. Buy one share, and you instantly diversify across tech giants and innovators. You're not just relying on the success of a single company. If one company stumbles, the others help balance things out. This built-in diversification is a key advantage, making QQQ a smart way to manage risk. It's a strategic move for many investors. It's tech-heavy, so you're investing in the future of innovation. You're betting on the companies that are driving technological advancements. You can buy or sell QQQ just like a stock. It's traded on major exchanges, making it easily accessible, even in small amounts. You don't need a fortune to get started. Through any major brokerage, it's a user-friendly way to participate in the market. In short, QQQ is a simple, accessible way to invest in the companies shaping tomorrow. It's about getting in on the ground floor of groundbreaking ideas. When you buy QQQ, you're not just picking stocks, you're betting on the future of technology and American innovation. It's a vote of confidence in the companies that are pushing boundaries and changing the world. So, you're probably wondering, how exactly does QQQ put money in your pocket and help you achieve your financial goals? There are two primary ways: capital appreciation, which is the increase in the value of your investment, and dividends, which are direct cash payments. As the innovative companies inside QQQ experience growth, and their stock prices rise in the market, the overall value of your QQQ shares correspondingly goes up, reflecting that success. When you invest in QQQ, you're essentially riding the collective success of 100 of the most innovative companies, spreading your risk, and not just betting on the fortunes of one single company. And historically, over the long run, this growth has often outpaced the returns of the broader market. In addition to capital appreciation, QQQ also pays dividends. While they might be small, they are consistent and steady. Major companies within the fund, like Microsoft and Apple, share a portion of their profits with their shareholders, and QQQ, in turn, passes those dividends on to you, as a QQQ shareholder, usually on a quarterly basis, every 3 months. Many savvy investors choose to reinvest these dividend payments, automatically buying more shares of QQQ, and further compounding their overall returns over time. Think of the capital appreciation as your main engine driving growth, and the dividends as a bonus boost, providing an extra bit of fuel. It's a relatively passive yet powerful way to steadily build wealth over the long term. With QQQ, you're strategically set up to benefit from both potential growth and also receive a little extra cash flow along the way. Let's talk numbers. How's QQQ doing in 2025? As of June, QQQ is up about 14% year-to-date, outpacing the market average. This surge is fueled by tech leaders like Nvidia, Microsoft, and Apple, all delivering strong results. Over the past 5 years, QQQ has averaged around 20% annual returns, turning $10,000 into over $24,000. The fund's low expense ratio means more of your gains stay with you. But remember, tech stocks can swing wildly. Big gains often come with big drops. If you're investing for the long haul, these ups and downs can be opportunities, not setbacks. QQQ's story in 2025: resilience, innovation, and rewarding those who stay the course. Past performance isn't a guarantee, but the trend is hard to ignore. Let's talk dividends. QQQ isn't known for high payouts, but you do get paid to hold. The current dividend yield is about 0.55%. On $10,000, that's roughly $55 a year. Dividends are paid quarterly, directly into your brokerage account. Most NASDAQ 100 companies reinvest profits for growth, so dividends are modest. The real magic happens when you reinvest those dividends using a DRIP plan. Your small payouts buy more QQQ, compounding over time. Even small amounts can snowball into significant gains over decades. It's not about the size of the dividend, but the power of compounding. For long-term investors, reinvesting dividends is a simple way to boost returns. QQQ's growth focus plus steady dividends make it a compelling hold. As we move further into 2025, it's a great time to take a fresh look at the Invesco QQQ Trust, or QQQ as it's commonly known. What's new for QQQ in 2025? Let's dive into some key changes and trends that are shaping this popular tech-heavy ETF. The index recently rebalanced, a process that occurs periodically to ensure the ETF accurately reflects the composition of the Nasdaq 100. This rebalancing involves adjusting the weights of the constituent companies, spreading weight more evenly among top companies. This helps to mitigate concentration risk and ensure a more balanced portfolio. Microsoft and Apple still lead as major components of the QQQ, maintaining their significant positions within the fund. However, other tech giants like Broadcom and Meta are gaining ground and now have more influence within the index, reflecting their growing market capitalization and importance in the tech sector. This shift contributes to adding internal diversification within the QQQ, making it less reliant on the performance of just a few companies. The growing popularity of QQQ has also led to the launch of new leveraged and inverse ETFs based on its performance, offering traders more sophisticated tools. But it's crucial to remember that these are risky tools designed for short-term traders with a high risk tolerance, and are definitely not suitable for most long-term investors. The real win for everyday investors is that it's easier than ever to buy QQQ, thanks to advancements in brokerage technology. You can now start investing in QQQ even with just a few dollars, making it accessible to a wider range of investors. This is largely due to the availability of fractional shares and significantly reduced or even zero trading costs at many brokerages. Furthermore, automatic investing plans and dollar-cost averaging strategies are now mainstream features on most brokerage platforms, simplifying the investment process. These developments are collectively making QQQ more accessible to a broader audience, empowering more people to participate in the growth of the tech sector. The big theme dominating the market this year, without a doubt, it's artificial intelligence. Virtually every major company within the QQQ is now actively involved in AI development and deployment, significantly driving the index's overall growth and performance. Therefore, for investors, closely keeping an eye on the ongoing AI race, observing who's taking the lead and who might be falling behind, can provide valuable insights and help you better understand the underlying factors that are influencing your investment's performance. In essence, QQQ's future trajectory is now inextricably linked to the ongoing advancements and future of artificial intelligence. So, stay tuned and keep a close watch on these developments, because this transformative theme isn't going away anytime soon. The future for QQQ looks bright, but there are risks. QQQ is a direct bet on innovation: AI, cloud, biotech, clean energy, and more. But its tech-heavy focus means bigger swings if the sector stumbles. Regulatory changes, an AI bubble burst, or rising interest rates could hit QQQ hard. Tech stocks are sensitive to Fed policy, higher rates can slow growth. For long-term investors, QQQ is a strong core holding low fees, instant diversification, and exposure to the world's most innovative companies. Balance QQQ within your portfolio, know the risks, and stay focused on the long term. Don't get rattled by short-term volatility. Consistent investing in QQQ can put you on the path to building real wealth.